If you're a veteran and you have an existing VA home loan, you have access to one of the most beneficial, powerful refinances and straightforward refinance options that are out there. It's called the VA IRRRL. VA IRRRL actually stands for Interest Rate Reduction Refinance Loan. Now, this program is through the U.S. Department of Veteran Affairs, or VA. Now, it'll actually allows veterans to refinance their guaranteed VA loan to a lower interest rate. Now, these IRRRLs, or VA loans, also can be used to refinance adjustable rate mortgages into fixed mortgages too. No cash out on them. VA or streamlined refinances are relatively easy, really not as complex, so we can help VA homeowners refinance their loan to another interest rate or lower payment as easily as possible, and allow them to reap the benefits of a lower rate environment. My name is Kevin Brierton, Certified Mortgage Planning Specialist, and your no excuse lender with the Kevin Brierton team. And in this video, I'm going to share with you how refinancing your home loan with a VA IRRRL works. So let's kind of begin telling you what a VA IRRRL is. And I touched on it just a minute ago. A VA IRRRL is a refinance option for veterans that's streamlined, and it has to have an existing VA loan on it. So you can't have a conventional loan going to a VA loan to use this. Now, you can do that on a normal VA loan, but you cannot use the VA IRRRL Streamline program if you don't have a VA loan. The VA IRRRL allows homeowners to refinance existing VA loan to a new VA loan at a lower interest rate and convert their VA loan from adjustable to fixed as well. And it often is called the VA Streamline because it's generally less paperwork, generally no appraisal or maybe a computerized valuation for it. So it could really make these a lot simpler and faster than a typical refinance. Now, these VA IRRRL rates, the primary reason veterans use this program is to lower their current mortgage interest rate. Now, these VA IRRRL rates may vary from purchase rates. This interest rate is historically lower than the historical average interest rates because it's guaranteed by the VA on the government. And so it actually makes these loans a little less risky. That's why the rate's slightly lower, because you're paying into a guarantee. A VA IRRRL may be a perfect program though to lower your monthly payment in this situation and your interest rate. So there's many benefits of getting a VA IRRRL. So let's take a look at a couple of them. So with the VA IRRRL Streamline program, there's several different advantages, including little to no out-of-pocket cost, no appraisal in most situations. To avoid out-of-pocket costs, homeowners choose to roll their costs into the balance of the loan. But there's some requirements around it. So you may be eligible for a VA IRRRL if you're financing a property, your loan currently has a VA or VA loan on it, and you can certify that you live there or have lived in the home. Now, the VA IRRRL is not available for veterans with non-VA loans, like we just discussed. Veterans with non-VA loans wishing to refinance to a VA loan could look at a VA cash out refinance option. Even though you may not be getting cash out, it's considered a cash out to do a conventional to a VA. Be very careful though. Look at that very closely, because you might get a better interest rate, but you might have to pay a VA funding fee to do it. So I just had a client in the years past that called me and said, "Hey, Kevin, I just closed on a loan. I got a great rate. Sorry, we didn't use you." And so we looked at the numbers and said, well, here's the concern. So the client actually paid about $22,000 extra because he got the rate he wanted, and that was in the VA funding fee. Now, in that case, I've had other cases where clients have come to us ahead of time, and we said, okay, let's pencil this out. Let's compare. So make sure you understand you might get a lower rate on a VA loan, but you might have to pay a higher fee. And we'll get into the VA funding fee. That's one of the special things about the VA IRRRL, because you'll pay a discounted amount, which I'll go over in a minute. So lenders also have guidelines and requirements regarding how long you've had the current mortgage for. So many of the payments you've made, you want to make sure you're going to recoup the cost associated with the new loan. So it's important to understand that there is a break-even point that's actually required through the VA. They actually require you to break even on the cost within 36 months. So there's a calculation you must do. That break-even point is not going to include like prepaid items like taxes and insurance, but it is going to include your closing costs, so underwriting, processing, any points you pay, title fees, things like that. So it's important to understand that and ask questions if this is going to make sense for you. But another important part of VA IRRRLs or streamlines is the VA streamlined refinance only requires the previous occupancy on the home. So unlike VA loan purchases, you don't have to actually intend to occupy the property as your primary residence. So some lenders allow you to actually do an IRRRL if you've moved out of the house, and you can still take advantage of the IRRRL. You have to look at each individual lender guideline. So instead of like if you purchase a house, it has to be your primary. But if you do a VA IRRRL, it might be allowed to actually be a investment home, and you could possibly take advantage of the VA IRRRL, which could be a really big benefit to using a VA IRRRL refinance when you might not be able to get that rate or that home refinance as a traditional refinance or an investment home product. So a VA funding fee up front, though, applies on every purchase or refinance loan unless somebody has disability. If they're disabled through the Veteran Affairs, Department of Veteran Affairs, VA, they may not actually have to pay into that VA funding fee, but generally speaking, you will have to pay that as long as if you're not disabled through the VA. Those proceeds are paid directly to the Department of Veteran Affairs, and they're used to cover any losses. That's why it's called a guaranteed loan, because if somebody goes into default, this money is like an insurance pool, called a guaranteed payment pool, and the money that actually is paid to help replenish any funds lost if somebody goes into default. The good news is VA funding fee, though, is lower on an IRRRL than a typical purchase on a cash out or a purchase. So because borrowers that aren't exempt from paying, like we talked about, if they're disabled or exempt from paying the VA funding fee, will have to pay only 0.5% of funding fee on their IRRRL. This is a far difference because VA funding fees can range anywhere from 1.5% or 1.4% all the way up to 3.3% of the loan balance, purchase or cash out. And it varies based on whether you're first time use, whether you're depending on how much you're borrowing. But the great thing about an IRRRL is you only pay 0.5%, saving thousands of dollars that could have been paid into that VA funding fee if you were not eligible from a VA to a VA refinance IRRRL. So that's a big piece there, a big benefit of a VA IRRRL. Homeowners who receive this compensation, though, through service-connected disability, that's the key. So if you're getting service-related disability or have a qualified surviving spouse exemption, they can be exempt from the funding fee. So check your exemptions or have your lender check to see if you're exempt from paying the VA funding fee at all. So you may be wondering, if cash out is allowed on a VA IRRRL, where a VA IRRRL, though, is generally a form of refinance where there's no cash out allowed. However, you can get as much as $6,000 in additional money for the borrower to cover some things like energy costs, and there's other things to do, but you can cover these energy cost improvements in some situations. So there might be a way to get a little bit of money out, but generally speaking, it's going to be no cash out. Most VA IRRRLs will allow you to skip a monthly payment based on the timing of when you paid your last payment and the new payment. But make sure you pay all your payments through closing, because that could be a reason why you actually won't be able to close on the VA IRRRL. Closing costs and fees can vary from lender to lender. So however, borrowers typically can roll these costs into the final loan, but keep in mind, refinancing may result in a higher finance charge over the life of the loan. So if you can shorten your existing term, it might be good to go from a 30-year to a 20-year if your budget works well. Some people like to go to a 15-year if it's possible, as long as that payment is not outside your budget range. If anybody loses a job, 15-year loans can be a challenge because that payment can pop up too high and become an issue. So you want to make sure you understand you can shorten your term, which could be a really good way to save money, but you want to make sure you can make that payment without any concerns, because if that payment now becomes a concern, your house can be in jeopardy. So we'll look at, if you want to look at different monthly payments or interest rates, you want to make sure you look at all options. So monthly payments, life of the loan interest, does the shorter term make sense? Does the longer term make sense? Whatever your financial goals are, considering a VA IRRRL refinance or VA streamlined refinance maybe just what you're looking for to lower your monthly payments or shorten your term. Thank you so much for watching. My name is Kevin Brierton, certified mortgage planning specialist and your no excuse lender with the Kevin Brierton team. And I hope I've answered some of your questions. Hopefully this has helped you understand more about the VA IRRRL and if it's right for you. Please don't hesitate to contact us. If you want to schedule a mortgage strategy call to talk through your situation, go to mortgagestrategycall.com, and we'll catch you on the next video. Have a great day. Bye.